Hello and welcome to another edition of the Moving Iron Podcast. This podcast is proudly provided by Axon, helping dealers move more iron for almost 100 years. Find out more at axontire.com. Axon was started almost 100 years ago out of a passion for keeping agriculture moving. It's that same passion that drives them today. With a vision for a better experience for both farmer and dealer, they set out to create a better way to move more iron. When you partner with Axon, you get immediate access to a full range of products and solutions designed to meet the complex needs of today's grower. Axon carries all major brands and sizes of tires, wheels, and tracks. From custom colors and sizes to fully customized wheels, you can have the solution for virtually any problem today's farmer is trying to solve. To find more or become an Axon dealer, please visit axontire.com.
Moving iron in the 21st century. Hard-working people working hard for you and me. Moving iron, time and time again. Through the years you'll find us here. Moving iron.
Hello and welcome to Moving Iron Podcast. Marcus with Chip Nellinger. This edition of the Moving Iron Podcast is brought to you by Axon Tire, helping dealers move more iron for the past 100 years. For more information, go to axontire.com. Also, if you're looking for a great place to help manage your salespeople's sales flow, as well as manage what they have going on as far as deals, check out heyarrow.com and see what Arrow's products look like for your dealership. I am always gracious to have Chip Nellinger on here from Blue Reef Agri Marketing, and Chip comes on a couple times a week to talk about what's going on in the marketplace. It's been a little bit since we had a chance to talk. Chip's out running around talking to customers and making things happen. So, Chip, how you been, man?
Hey, doing well, Casey. It has been busy. We've seen a nice little rally in the corn and the wheat market here. So it's provided some opportunities to really make some profitable sales in here, you know, and with the yields we're blessed with this year on the corn side, still looking at great profitability in here on corn on this latest push north of 580. So we've been taking advantage of these sales, offering $1,200, $1,300 plus dollars an acre gross on the corn side for a lot of people. Still haven't really been able to put a bean rally together that is decent enough to, want to reward. But we got some good things happening here in the short run. Export sales were pretty good today. And ethanol demand's been very strong for corn. So there's some good things happening here, and at least the corn and the wheat market have been responsive to the upside in here.
Right on. I spent a little time talking about crop mix. I think, you and I both aren't, we've talked about this a million times, but that March acreage report or the prospective acreage report that comes out is always kind of just a whatever thing, and it rarely is it right. But this year, I think, with the prices of fertilizer that we see right now, do you feel like, I guess, how do you think corn's going to play into that? I mean, to me, I see corn getting pushed further. Unless the price gets like $7 or something like that, then obviously more corn acres are going to get planted. But at the current pace that we're headed right now, it looks like to me there could be a lot more wheat and soybean acres get planted than corn acres. And it's still some acres from corn going into 22.
Yeah, I think it depends on where you're at. You don't typically see big shifts in acreage in the I states. They come from kind of the extremities from the heart of that corn belt, up in the northern plains, the Dakotas, and parts of Minnesota, and then down south. With that being said, given where inputs are at, you've got December 22 corn futures. The last trade I'm showing here is 549. That's on the futures. You take a basis off of that, and it is not profitable. You've got production costs, $1,100-ish an acre right now. I've got producers that are in the I states that are considering, in some cases, growing all beans next year. And so if that kind of discussion, I don't know that will for sure happen, but there has been a little bit of a shift because of nitrogen and fertilizer costs. But If you go outside of the heart of the corn belt, corn is probably last on the list. And, you've got spring wheat that's at multi-year highs. You've got cotton at multi-year highs. You've got canola at all-time highs. Sunflowers are in that canola mix. They're at multi-year highs. And oats, all-time highs. you've got corn in those northern plains areas that's probably on the bottom of the list as far as crop rotation right now. And I think as you get in the south, cotton's going to have a lot of consideration, as well as soybeans. So, yeah, I mean, to your point, we haven't even really begun fighting that acreage battle out yet in the market, because we're still trying to figure out, what's the November crop report going to say? What's demand doing? What's China doing?
Yep.
Once you get into like that December, January timeframe, the market's going to get way more focused on acreage. But I would not be shocked to start seeing some estimates out 5, 6, 7 million less corn acres. It would not shock me. You won't know till the June 30th report, but how this thing plays out is going to be really interesting into winter. And then at the same time, we've got Brazil in the discussion too, because they've basically the fastest planting pace that they've had in close to history. They're 50+% planted. There's talk that they're planted so early in some areas they'll have beans by late December. And so, they're on track for a massive crop unless they have a major hiccup from Mother Nature in here.
Right. All right, so that's my next thing I was going to talk to you about was what's going on in South America. So like you just talked about, record pace for planting, record bushels, a record number of acres getting planted into soybeans. It looks like everything's kind of tracking the way it should be, but then you bounce over to Argentina, and they're still fighting a lot of drought in some key areas down there. So I guess as you look at South America and you start kind of putting those puzzle pieces together, what's that mean for the soybean? I mean, because then it kind of goes back to our previous conversation. You start looking at this huge amount of soybeans coming out of Argentina and Brazil, and then you throw that on top of the soybean acres that might get planted here in the U.S. All of a sudden, even though commodity prices or fertilizer prices are high, corn might have to slip back in there just because of, we're going to see a big shoot up in price just based on the amount of soybeans on the market. So I guess looking at the soybean mix down south, I guess how you talking about that with your customers right now?
Yeah. I think Argentina is kind of the key to this thing. They have been awful dry. It's a La Nina year, which means they could trend dry all growing season for them. They have been getting some better rains, so I don't think it's quite as critical. I think they're going to be able to get stuff planted, but past that into winter is going to be really key, and that could be something that throws a little bit of a monkey wrench in the works here if they get on the dry side, especially in the main part of their growing season, into kind of like December, January timeframe. To your point on the acreage mix here, it is a ratio, right? It doesn't have to mean that December corn goes screaming higher. It could mean that beans go lower. That's how you could fix that ratio too, unfortunately. So you have to be on the lookout for that. But, what it means to me is there's still going to be a lot of volatility, right? And, you got the South American weather situation. You've got the acreage mix here. Demand's really, really good, especially on corn, with all the worrying about China's not buying beans and our exports on beans aren't going to be, up to speed. As of this morning's export sales report, we have caught right back up to the pace we need on beans. Now, we got a long way to go. That doesn't mean we fall back behind. We're 11% ahead on corn. We caught back up to the pace right where we need to be to hit the USDA projection on beans as of this morning's export sales. So, with all the worrying going on, you can argue that demand right now is still pretty good. We've had 2 back-to-back massive ethanol grind weeks with crude oil, even with a big correction yesterday, still north of $80 a barrel. So there's just, enough uncertainty out here that we're likely going to continue to see a lot of price volatility. And with that, that's not easy to gut through when you see, beans up 20 one day, down 20 the next. But it means there's likely going to be some opportunities here. We just have to have a plan and be ready to, take advantage of things when we're given the opportunity. And that's the hardest part of this. It's not, will we have opportunity? It's what are we going to do with that opportunity? when it comes, because it might not be there for very long.
Yep. So here's one, kind of throw a monkey wrench into things a little bit. China signed the largest liquid natural gas deal with a U.S. firm in their history, but they signed a 20-year deal to buy 4 million metric tons of liquefied natural gas over the next 20 years. Okay, so that's kind of a big deal when you look at the natural gas situation that we're in right now, and the inability to get that natural gas to market, and then worldwide, not just in the U.S. I mean, we're struggling a little bit here, not as bad as Europe and other places around the world. What do you think that's going to do to the overall fertilizer picture? Now that you see this, that's a big number of liquefied natural gas going to China.
It's a big number for sure, and it just goes to show the energy situation that we're in. So I'm a little bit maybe pessimistic, maybe questioning. China is still trying to kind of hit some of the numbers they agreed to on their Phase 1 trade agreement. There's no question they need natural gas and some other energy products. They're as short as anyone in the world. Big push, to go green, although going green, really all that means is, to me, we're not ready to go green, and we're going to, kind of fall into some energy shortages in different parts of the world, like we already are in. So that 20-year deal, to me, just be brutally honest, maybe that's a 1-year deal, maybe that's a 20-year deal. But the case in point here is that they are taking it right now. That's good from our standpoint, but it just goes to show you how short the world is of energy right now. We've gone away from coal, we've gone away from nuclear. The EPA's been slow to try to implement, some renewable fuels in the United States, because they're in the back pocket of the oil companies. And so, I think it's good news. I think it's a sign that we're short, of energy and fuels across the world. And it doesn't bode well for, maybe nitrogen and fertilizer costs. China's clamped down on what they're exporting. Russia now is going to put export taxes on some of their nitrogen and fertilizer. And, here we are with our fertilizer and nitrogen costs going up almost on a daily basis to, what's easily into all-time highs. So it's a real problem, and it goes back to what we were talking about earlier. What's the acreage mix going to be? How's it going to affect corn and to a lesser extent wheat? Multi-year 8, 9, 10-year highs in wheat, but yet wheat's not as high a nitrogen and fertilizer user as corn, but it's up there, and so it just is another interesting piece of this puzzle that just seems like they change the pieces of us, on a daily basis in this thing.
Yep. All right, last thing. I don't even know. This is so convoluted. I don't know if you could even make this stuff up. But all this week, I've been reading articles about China and overproduction in the pork market, and all of the measures that they took for the African swine fever when it came to backyard breeders and raisers of 1 or 2 or 3 or 5 pig type of thing, how that was supposed to be wiped out, have come back in and said, well, that's why we have an oversupply now, and basically they were hinting to the fact that pretty much expect us to have another African swine fever breakout sometime in February, basically. I read 3 articles that said that, where you could pretty much just say, well, we're not saying that we have a problem, but if we were to have a problem, it'd be in February. I guess what do you take from that? I mean, what's your thoughts on that whole situation?
Well, I think you can almost disregard what China says. I mean, I think the world pretty much has them figured out that they're going to put out what they want to put out to try to steer prices in the direction they want it to go. I'm a big believer of, look what I'm doing, not what I'm saying. And this morning's export sales, China's in for 16,000 tons of U.S. pork. they've never really stopped buying our pork. And so I think that's key right there. So, have they built that herd up back to the levels that, they said they did pre-ASF? I don't know. Just look at what they're doing, not what they're saying. And they haven't backed off very much on buying U.S. pork at a time they say, oh, everything's great. We got an oversupply of pork in here. So, something's kind of divergent in that. And, they've also said the same thing. Well, our citizens should, stock up on things so there's no shortage in the winter.
Right.
And then it's like, well, no, we've got plenty of stuff out here. We didn't want to panic anyone. It's like, I just don't say anything, just don't say anything at all because nobody believes anything that you say anyway. Yeah. So it's going to be hard. And that's why you just don't know. You got to watch what they're buying and the quantities and just almost disregard what they're saying because they're gonna lie to you. They're gonna lie to your face and shake your hand while they're doing it.
Yeah, it's kind of like it's not cold outside, but you better get a heavy coat, a real heavy one. But it's not that cold, type of thing. It's just these articles I'm reading are just like, watch what the left hand's doing and don't pay attention to the right hand. It's so blatantly obvious. You know what I mean?
Yes.
Like you can't make it more obvious than what it is. It's just
and the rest of the world's learning from them. Russia's now doing the same thing. It's like, oh no, our wheat crop is really a good wheat crop, and at the same time they're putting
raising export taxes.
Export tax, and they're not exporting any. It's like, but no, we got plenty of wheat though.
We got plenty of wheat. Everything's good. Nothing to see here. Keep moving on. But
so the rest of the world's taking the the playbook from China. So I don't know what that means. It's not good though. I know that.
No, it's not. It's really not. All right, Chip. With all the stuff going on here, if you're working on a plan, how's the best way to get a hold of you and the guys over at Blue Reef Agri Marketing?
Well, Casey, the best way is just give us a call right at the office. It's 309-550-7213. Love to chat with you. A lot of moving parts, and it's critically important to have a plan and execute on that plan because profitability can be there, but it's going to be fleeting, especially into the 2022 crop year here.
Right on. Well, I am Casey Seymour with Moving Iron Podcast. Make sure you check me out on Facebook, Twitter, and Instagram. That's where you're going to find the latest editions of the Moving Iron Podcast. Also go to MovingIronLLC.com for all the latest information about the Moving Iron Podcast, as well as the Moving Iron Summit, which information should be out on that here directly. So with that, I am Casey Seymour with Chip Nellinger. Let's go get some iron, folks. Out. You want to have a meaningful competitive advantage to help sell more equipment. Whether you represent the sales, parts, or management department of an implement dealership, there's a surprising amount of complexity when it comes to tire, wheel, and track technology. Let Axon worry about that so you can get back to supporting your customers. Axon has leveraged years of experience to create a streamlined process that gives you a proven path to help today's grower and sell more equipment. The roots of their organization go back almost 100 years to the invention of the rubber tractor tire. Supporting agriculture is the number one driver of Axon from product development through sales and service. To find more or become an Axon dealer, head over to axontire.com.
Moving higher in the 21st century. Hard-working people working hard for you and me. Moving higher, time and time again. Through the years you'll find us here. Moving higher.